Okay, here we go. Pre-flight check. Audio input capture is a go. Let's see, where are we in terms of fitting into the frame? Okay. Charts a go. Back to the big head. How you doing, friends? It's Ernie, and today is Thursday the 17th of October. Boy, this month is just flying by. Today we're going to do a little bit of a analysis of Bitcoin. We're going to take a look at the signals that PatternCast has been putting out for our members. And by the way, if you would like to take advantage of and join us in the Bitcoin service for with PatternCast, just go down below and click the link. So why don't we go directly to that? We'll go right to where we are right now. So what I've started to do is create a running log, just so that people can actually see. But, it's one thing just to talk about all the different trades and everything and all the wonderful success, but it's quite another to actually show them in play and what they're doing. So what I'm doing here, you can see where the entries and exits are on each trade, and each trade is color-coded. So when you see green, for instance, you see the entry, the target, the direction of the trade, and the length of that trade. Okay, and then you see the next trade, which would be this sort of yellow, orange, or gold color, and then the next trade after that, this cyan, and then the purple one, etc. And it just goes on and on. Now, all trades have a maximum lifespan of 4 days. Every day we have signals or non-signals, and about 40% of those signals are actually triggered. So that's why on this first green trade you see there isn't another trade for 4 whole days, because there were 3 successive signals that did not trigger. Then finally we got this new one that did trigger, and that's the gold trade. That gold trade got 3 days into the trade, and then another signal another signal triggered. That was the cyan trade. Now it started going against us, and then we had another signal that was saying going long, and it triggered the next day. That's the current trade that we're in. And so the question some people have been asking, well, when you have a trade that kind of goes against you, you still have 4 days for that trade. Do you consider that a failed trade? Well, no, we don't. We look at every trade individually, and quite frankly, what I did in this particular case, and that right here is where I'm talking about, I added to that trade, and it has already actually hit the target briefly and then pulled back, but now we're in these 2 trades. So, one could argue if you were to take the average of these 2 trades, we're in profit on both of these trades. If we were to hit this target, then we're in profit. Well, we're not in profit in this trade, but the average would be in profit. But once we hit the target of the purple trade, then the blue trade would be in profit, and it may continue up. We might even get another signal that's triggered in between here that will do something different, and then we have to take that individually. But for the purpose of tracking, we're going to track each individual trade in its 4 full day span, and that's how we actually keep our data in our database, so that we can then report back what is the overall performance of each trade. So we can't assume how people are going to actually treat each one of these signals, how they're going to trade. So at least by this here, in these first 4 trades that I'm showing, we're showing 2 trades that were very successful. They didn't completely reach the target, but they were profitable. The third trade, which is not yet profitable, but is about at break even and still has some time to go. And then the current trade, which is profitable and still has some time to go. All right, so that's where we're at. And I'll keep a running tally of this and just keep on going. And then it'll be real easy to see exactly where we are, and people can see the trades, see where the entries, exits are, how it's performing, etc. But what I can report to you is that I think it's at 23 out of 25 successful trades based on this type of tracking. And that's since August 14th when we opened up the Bitcoin service. So that's pretty remarkable. We'll keep that going. That's pretty much in line, maybe a little bit better than the performance that we have on our futures service. Although it's still hard to tell because we don't have enough data with the Bitcoin service yet. With the futures service, we've already got or amassed over a year about 320 trades, 325 trades, I think it is. And its performance has around 84 to 85% stats that are very remarkable, where we say that 65% of all the trades that are triggered at least reach the target or beyond. 70% of the trades reach at least 70% of the target or beyond. 84% of all the trades are profitable at some time in that 4-day period. Now here's the most remarkable thing. The average total height or extent to which a trade exceeds beyond its entry is 185% of the target. That's the average. All right, so we have 85%, of course, some only reach maybe 5, 10, 25%. Some reach 50, some reach 75, some reach 100, some reach 150, some reach 200. We even have some trades that have reached 1,500%. But the average is about almost two times the target. With Bitcoin so far, the average has been about, and actually in the past few days, that average has shrunk a little bit because Bitcoin has been under some a great deal of, I won't call it pressure, a lack of volatility. And that lack of volatility has pretty much decreased the overall daily average move. And so where we were closer to 600 points per trade, now we're down just under 500 points per trade, which is still fantastic, especially when you consider that about 91% of all the trades that have triggered have resulted in a positive result. So that's pretty cool. So they're comparable. They're comparable to the futures, forex, and stock trades, and I think the reason why Bitcoin does a little bit better in terms of a slightly higher percentage, and we'll see if that continues on down the line, is because there is no downtime with Bitcoin, and the system, PatternCast, the pattern recognition technology, is much more adept and has this continuity of data, even though it doesn't have as much data. It only goes back about 5 years. That's the amount of data that we could actually put together that's useful, and that's across an aggregate of 5 of the biggest exchanges. Actually, it's 6 now. The continuity of the data is it's easier for PatternCast to find patterns, and patterns that it can match up. Where in futures and forex and stocks, obviously weekends, they have downtime. And stocks, obviously, are only within a very small window. So that's all good. That's where we're at. Now let's take a look at, from a high-level point of view. Now, one of the ways that I recommend managing the trades. We talk about managing profits. We don't talk about managing risks here with PatternCast because we have this sort of definitive edge. We don't have to worry so much about the risk. Not that risk isn't a worry, but instead of setting these tight stops like most people do with trades and try to assign a risk to reward, which is a total fallacy. How do you tell what that risk is? Just because you found some level down there, you don't know. You don't know what the statistical variance of that is. You don't know what the actual risk is. But we do. We know based on historical performance, not based on the past 15 bars, but based on the historical performance over the past 5 or 10 years or more, depending on the asset that we're tracking. We know what the edge is. So we don't concentrate on managing risk. We concentrate on managing the profit. And that is a much more positive and confidence-building way of trading, and particularly when you have a system that is providing you the kind of performance that PatternCast does. So the way we manage those profits, that's completely up to the trader, but the way I recommend doing it is using volume profile, because volume profile provides you with a definitive structure, a mapping of the market as it stands today. It is forward-looking. So for using volume profile, once we're in a trade, you can adjust your position size based on the confidence of that trade, how it looks, where it is positioned on the volume profile. Another very interesting thing is, if you look at all these entries and targets and everything, notice how they all seem to sit right on the edges of volume nodes, which is really remarkable because even though PatternCast really knows nothing about the volume profile, it seems to have this ability to be able to pick off exactly where those opportunities are, and then it gets borne out when you see the volume profile. All right, so let us go to a daily chart and see where we're at. Oh, look at that. There's the big descending triangle that we broke out of. Let's bring in some more data so we can see. I want to bring in where we started to drop in late 2018. Because I think that is significant. And of course, we live called this drop out of the descending triangle, to the day, to the minute, to the dollar. And that was a fantastic trade. And we've been calling these trades here along this line very well. But the way I look at this is I see what appears to me to be a consolidation, perhaps even a bear flag. So I'm looking at something like this. Hold on. So there's our consolidating area. Here's our flagpole. And we can use this as kind of a measured move. So if I were to take that flagpole and then move it down from the top of this flag to here, that's probably a good projection about where price is likely to move to. Now, actually, if I move, let's, I think we have to adjust this a little bit so that we encompass the full movement, the full price action of this, and place these properly. All right, so here's the measured move. Now, what's interesting about this is that measured move brings us right to this little detail here on the volume profile. We have this big volume well, huge volume well. And you know that volume wells, what typically happens once you enter a volume well, price starts moving very quickly. And either we move all the way through the volume well or we get rejected. Now I can see that this little titty here, this little tip right here in the volume well, right at about 6,400, could potentially provide that kind of support or rejection area. And so price could do something like this. I'm thinking, price could come down. Oh, we don't want a dotted line. We want a solid line. Price could do something like that and hit there and then get rejected. Right? So that's one possibility. And that would make sense, based on this kind of measured move. That looks like about right. I mean, overall, from back in late 2018 to today, you have to say that we're more or less in an upward trend. Not a very strong one. We have a big consolidation here. Maybe we continue to move up. I don't know. But in the short term, we're definitely in a downward trend. All right? So that's what I'm thinking. I'm thinking that in the near term, we're probably going to move out of this consolidation area, move down to about the 6,400 area, and then bounce there. Now, should we have, maybe this is the next area that we might go down if that does not provide the proper support that we need in order to realize that. All right. And if we get down here, I don't see any reason why we couldn't go even further as low. I mean, this is the extreme position, but I really think that what we're seeing here, this first bounce off of the middle of this volume well, moving straight through this and then getting rejected very quickly. There's going to be enough people out there, enough whales that probably don't want that to happen, and it also will probably represent an opportunity for institutions to enter here. But why wouldn't they want to enter also at, say, 5,000, just as much? I don't know. So this is a big question here. I'm going to give this kind of a 60-40 type of odds. Let's say that I think that the breakdown, is a good 75% chance of breaking down. All right. So I think that's going to happen. But if it doesn't, let's say that we rise from here. There's really nothing stopping us up until about this point here. Another big volume well. That's about a 25%. Now, the way I determine that, the 75 to 25, is really based on the strength of the current direction, the current trend. And we have a pretty strong direction to this current trend. So we are moving down here. So I give the odds to a continual breakdown, plus the fact that we have a consolidation and a very strong and very definitive, or not definitive, but a very strong looking bear flag. So I see, breaking down to this area as not imminent, but a higher probability. I also think that finding support here, I don't want to give this 50-50. I'm going to give this a little bit stronger than 50-50, only because in the long term we're still in an uptrend. So I'm going to give this say a 40%. I'm going to say 60% to the upside and 40% to the downside. All right, so that's the way I'm seeing things here. Now that makes sense to me. Of course, this is longer term projection. We're looking, for all of this to occur over the next 4 weeks or so, 4 or 5 weeks, maybe till the end of the year. Maybe the slope of my my arrows is not indicative of time. Perhaps this should look more like, I don't know, something like this. We'll find out. We'll find out. Maybe something more like that. All right. Enough for the predictions. All right, Sean's asking if signal 1 is triggered and the next day signal 2 triggers, does that not nullify signal 1? That's a very good question. So let's go back to that, the signals here, and we'll see what Sean's asking. So he's asking about the most recent trades. And that's these two trades here. So we had, 2 days ago, we had an entry at 81.25, and that was a long trade, and we were looking for it to go up as high as 83.13. But it didn't. It went straight down. And again, we're giving these 4 days, so this is not like a big deal for us. And most people are thinking that this is perhaps even an opportunity to add to the trade. But in the meantime, we had the next day, last night, a signal that said, enter if we get down and hit this level of 79.59, which it did. So Sean's question is, do we abandon this trade and then now this trade takes over? So I guess then what you're asking then is, are we still in the same position? And now we're just looking for a break-even trade, essentially, if it comes up to 81.35. And I would say no. I would say that what we're really looking at, and this is what I've done, I've added this trade on. And so now I'm playing both trades. I am playing the first trade to come up to this first target. I'm sorry, the first trade to come up beyond 81.35 and still reach for the 83.13. And then the second trade, which is almost a 100% winner, to at least go to 81.35. What I'll probably do, now I'm at a two-size position here. Once we reach up here, I'll probably take 25% of this off and collect that profit, and then see if it will continue up. If it does continue up into this area, I will probably raise a stop so that I have a riskless trade on the original one. And then we'll see where it goes from there. If it goes down, I may consider adding to this trade, maybe, or if it goes down far enough, adding some more. I'm not looking at bailing on this at all. I don't think. It really depends on what the next signal is. If the next signal is giving me more positive outlook, then I'm going to probably stick with this. So if not, does this mean you could potentially have 4 signals triggered at one time? In other words, 4 successive signals. Maybe one just keeps on going down. We keep on getting an entry for another long. Yeah, I suppose you could. And although we've never really come across that situation, even with the other PatternCast, although with the other PatternCast we're dealing with many, many different asset types. We have all the futures, all the Forex, and several stocks that we're looking at. But it's quite often that we have several trades on at once. And I suppose you could look at it just like that, as if each trade is an individual trade, and treat it that way. In fact, I think that's the way I would like to treat Bitcoin, that each trade stands on its own. And so if we have 4 successive trades, then stay in all 4 trades. And if they're opposing trades, then maybe one of them will then negate the previous trade. All I say says, I've been finding with some of the calls when long, usually there's a slightly better entry if you're patient. That's true. And it's the same way in the traditional PatternCast market calls as well. A lot of times we wait a little bit and we get a better entry. But in general, once PatternCast, and we provide this information in the room, even for non-signals, they give us clues as to whether or not PatternCast is biased to the upside or to the downside, and that helps us make these decisions. And Sean agrees. Raziel, it's starting to look like a giant head and shoulders if it plays out the target. Now I think Raziel's referring to this guy here. I don't know. A giant head and shoulder. I guess you could call this. Nah, I don't look at that as a head and shoulder. Not yet. I suppose maybe the flag down here might be a kind of a head and shoulder, but a head and shoulder, Raziel, if you look at it from a statistical point of view, actually has almost an equal chance of being a continuation pattern as it does a reversal pattern. And it really depends on the context of the shoulder, whether or not that is going to be a reversal. Let's get another 1,000-point call on the dollar and the minute, please, Coach. Yeah, the volatility has definitely dropped out of this market over the last few weeks, and we're not getting that much true range from day to day, and so we're not getting that kind of action that we really want. So but be patient. We'll get there. We'll take these small trades, and then we'll be ready for the bigger trades. Right now, sorry. Coco says, and if it goes in the opposite direction, and you have successive trades, then I'm going to say that that kind of negates the trade before, right? If it goes in the opposite direction, then what PatternCast is telling us is that things are turning around. That so for instance, here we had two short trades in a row, and then we have long trades. Now we got out of this trade here, the entry at 82.68, when we got this other trade here at 82. Isn't that right? Oh, that's an older version. Yeah, this 82.68 trade, we got out. We would have made even more money. So yeah, had you ignored the long at 81.25, you would have made even better with this short trade here. But we didn't. Generally, I mean, again, it's up to the individual. Generally, what we do is if we have an opposing trade, we go with the opposing trade. But we've made up for it, with this new trade here. So it all comes out in the wash, I guess. I don't know. You don't know what the future holds, so you can only go with what the system is setting up and giving you its best estimate or evaluation of where your bias should be. Should it be long? Should it be short? Where are the proper entries and targets, etc., and then go with that. Then position size yourself based on the total confidence of that trade. And of course, with Bitcoin Cast, we're also providing the odds of each one of these trades, or at least the historical performance. What percentage has won and how many of these instances or occurrences have happened. And from that, you can intelligently put down, your own perceived notion of the strength of that trade, and perhaps how much you should actually commit to that trade. Chris Corey, at what point do you think a continuation pattern like this bear flag loses its statistical edge if it doesn't break out, for example, if this one lasts for a few more weeks? Yeah, there is a point where I think once a continuation flag lasts beyond, say, 2 weeks and starts getting into that third week, it's no longer a continuation. It's no longer a flag. It starts turning into a channel. So hopefully that answers your question. And actually, that's backed up also by some statistical reports and analysis that Bulkowski has done. And he says basically the same thing, that once you go to the, beyond the second week of a flag on a daily chart, then it's no longer a flag. You can consider that a channel. But, we're nowhere near that yet. Well, we're very close to that, actually. I would say that another few days and it's starting to get into that third week. So that's a good point, Chris. All right. Half hour into the show, I think we've covered everything that we need to cover. If you would like to trade with us at PatternCast, we have, we've got, I think, about 300 members right now. We have a trade room that is vibrant, a great community, people that have been trading PatternCast for over a year now, and a lot of new Bitcoin people. A lot of knowledge is in there, provide you with a lot of great help. We provide, it's almost like you're getting mentored and coached too when you join our service. Not only do you get an edge, but you also get first-class support. I mean, what else can you ask? Anyways, that's enough of that. I want to thank everybody very much for showing up. Please go down, hit the like button, smash that like button, and also share this video on your social media. Would really appreciate it. And now it's time to go. Adios. See you next video.